This is the closing table, where we talk all things owner financing, creative deals, and how to get your transaction across the finish line. We're Team Escrow Services, and together with industry pros, we'll unpack the strategies, the challenges, and the success stories that make real estate work, even when traditional loans don't. Let's jump in.
Welcome to the closing table. Today's podcast features Gabby Williams, a realtor with Team Unique who has been in the real estate industry for 7 years. I am your host, Rachel Leday, and thank you, Gabby, for joining us today.
Thank you for having me.
I know you have done some podcasts and interviews before,
Yes.
So we appreciate you taking the time to be with us today.
Sure. Happy to be here.
We are going to talk about how real estate agents work with clients who are maybe pursuing owner financing. So
Correct.
That's our topic for today. And you have a lot of experience in working with buyers who maybe need something a little less traditional. Is that true?
Yes, it's true. So within the last about 3 to 4 years, I've noticed that the owner financing, or bond for deed as it's known, has gotten more of popularity. It's always been around, but I feel like there's people that don't know enough about it or have never heard that it could also be an option to purchase a home.
So you're saying that it's more prevalent. What do you see as some common causes that would have a buyer interested in exploring owner financing or bond for deed?
So a lot of different things. It could be, that they might not have a credit score. Some are probably still working on their credit. Some might be self-employed and can't obtain a loan. But I feel that for the majority of people, some maybe are just not ready to have everything that they need, for one reason or another, to obtain that loan. I know with credit score, that's a big thing for people. So they, their interest rate might be a lot higher versus with the owner financing option.
Okay, that's a good point. So based on their credit score, that might put them into an APR bracket that makes the home maybe a little less affordable. While they're building on their credit.
Yeah, because what's one of the things, the criteria, that price can be negotiated, your interest rate can be negotiated, and also the terms of how long you would need to finish paying off that property.
And in the last 6 or so transactions, what's kind of a common term as far as months or years that you've seen some of your buyers ask for?
So I have a few as low as 3 years, but the average is 7 to 10 years.
Okay, longer term.
I do have a client that has a lot of property and has given buyers the opportunity to pay a bond for deed anywhere from 15 to 30 years.
Wow, like a full mortgage.
Yeah, he's older, so he's using the interest rate as a passive income for him.
That's very interesting. I didn't realize that some maybe larger scale investors that have property would do that.
Correct.
Second question, what role does a real estate agent like yourself play in helping clients understand and navigate these creative financing options?
So I think it's really important to, always educate your buyer that there is, something, another alternative to traditional financing. And it's one of those things that I find that a lot of realtors still don't understand or have not navigated all the terms and how it works, or, just not, there's a lot of people that just don't know about it. But I think it's very important, especially nowadays that the interest rates are a lot higher. Some insurance has gone up a lot, that it's something to have in your back pocket as an option to a seller that might not be familiar with those options.
That's great. We are trying to add some of those FAQ items onto the website on teamescrowservices.com, just to kind of give buyers and sellers and realtors a little bit more information just to get started.
Sure.
Just because it is a new concept to some people, although it has been around for a while.
Sure.
In your experience, what are some of the biggest misconceptions that buyers or sellers would have about doing a bond for deed transaction?
So with bond for deeds, it's not only residential, it could be multifamily, it could be commercial. It's basically taking the bank out of the equation and you're dealing directly with that seller. Like I mentioned, you can negotiate the price, the interest rates, the terms. There's some sellers that want specific and detailed things in there. Like, for example, the buyer has to carry insurance, the buyer has to pay for taxes. It's basically just like a traditional home purchase. You're still responsible for maintaining the property. If there's something breaks, if there's any damages, that buyer has to understand you're not leasing this property. This property is something that is eventually going to become yours once it's fully paid for. So they take every responsibility and ownership that everybody else would do with a traditional loan. Those things like that, they just have to be very clear and understand that, they're not a tenant, that they are a homeowner.
Right. So the owner is not a landlord you're paying a lease
Correct.
payment to, but it's actually sort of like the owner becomes the bank, and then
Sure.
the purchaser or buyer
Right.
is.
And
the
it's not like a monthly rent. Every payment that goes into the purchase every single month is meant to obviously reduce down the debt for your purchase price.
and gets that equity, which is
Sure.
a really
Yeah.
valuable thing for the
Yeah,
buyer.
so that's a big, huge plus for somebody. They get, as a buyer, you get that equity. You get to still write off taxes just like everybody else. You get all the benefits that a homeowner would get.
So I think it's important to note that for that tax benefit, you have to
Sure.
have a really good reporting and documentation system
Sure.
to be able to do that, which is why we, of course, suggest going with a licensed escrow company so
Yes.
that they can do that, tax savings and really let it be a benefit to the buyer.
Sure, that's a big plus, because they do report the monthly payments. If you're paying on time, you're taking care of the property, doing everything that a homeowner should be doing. They report it to the credit bureaus, which does help with your credit score. So that is a big plus and a big advantage. And of course, it is important to make sure that you're closing with a licensed escrow company that's going to process those payments every month. They make sure that the taxes are paid for, insurance is paid for every year when the renewals come in, and it keeps everything organized. And they're going to keep a history of all the payments that you have been making, and any of the details of your file throughout the lifetime of the loan.
Yes, that's really a great comprehensive answer of kind of what a servicing company can,
Of course.
help you with. Can you share a real world example of a successful recent transaction that used a creative financing tool and what made it work so well for your clients?
So one of my recent clients, they had a property. The property, of course, needed some work. It was also in an area that's considered a flood zone. And he was having he tried selling it for sale by owner and wasn't able to sell it. It was on the market for a long time. And I had a buyer who was in the construction business. And of course, he would be willing to do all the work, would bring in the materials. So it was really a win-win scenario for him because the house, since it sat a long time on the market, I brought up to the owner, hey, I have a guy, where we can make this a win-win situation. He could fix the property if you would give him the opportunity to do owner financing, where he would put 20% down, and of course maintain the property, keep up with the flood insurance, keep up with the taxes. So it ended up being a win-win situation, because that owner had accepted a job up north, and they had to sell their house to be able to get into something new where he was going to.
I think that's a great point because even I sort of think of a bond for deed scenario as a win for the buyer. But in your example, it really not only is it a win for both, but it's a heavy win for a seller who maybe needs to transition out of the property with a move
Sure.
or a transfer, or maybe just to collect, assets so that they can do something else with
Right.
their life. But it gave that seller an opportunity to come out of the day-to-day sort of like maintenance and care and even flood insurance
Sure.
responsibility for that project,
Right.
or that property, while also giving someone else an opportunity to have a place to live, which is a pretty cool thing that you were
Right.
able to marry those two things, and having a realtor with that understanding of how to walk both sides through is really what made that successful.
Right. So he's been on a bond for deed now for almost a year. And like I said, it's worked out perfectly for them.
That's amazing. I love that story.
Yeah.
Thank you for sharing that. Okay, so last question. If another real estate agent had questions and wanted to start offering the service of helping kind of match
Right.
people with creative financing for their clients, what's maybe one or two things that you would tell them to go learn or to maybe start to begin the process of walking clients through owner financing?
I think for somebody that wants that alternative option for their clients, it would be a really good thing to educate yourself a little bit about bond for deeds, how they work. Um, Another thing is to not all bond for deeds are 100% paid for. Some do have mortgages that the seller still is paying for. And one of the things that I have learned over time is you've got to um, kind of coordinate with that mortgage company, because not all mortgage companies will accept a bond for deed. There are some that, with their guidelines and their stipulations on their contracts will now allow it. So do your homework, use a licensed escrow company or title company, to make sure that that's not going to be a problem later on. And to maybe attend training classes. I know Team Title sometimes has them available. Don't be afraid to try something new, but always have it in your back pocket as an alternative for your client. Because at the end of the day, that's what we as realtors do. We try to facilitate and educate our clients, to the best of our knowledge, so that they can also have other options.
That's a great point. So a qualified title company that has done transactions like bond for deed would be able
Right.
to answer some of those legal questions
Sure.
regarding, what terms are allowable, or if something does or doesn't make sense. They could be a good resource for gaining
Sure.
information and kind of to help the realtors learn what is doable, what makes sense for people,
Mhm.
and kind of how to follow the processes while still being a win-win for the buyer
Sure,
and
and I do
seller.
want to mention too, with the, being a title company, they're able to look over the abstract in that title, because you want to make sure that you're getting a clean title here, where so you don't have trouble later on if you end up selling the house, or wanting to do something different. I really believe in title insurance. I think it's very important. Um, uh, it's one of those those things that you need for a peace of mind, in my opinion. I would never purchase a property without title insurance.
That's a great point. Okay, I have one more question for you just about your experience with your clients with the closing process, because we're talking a little bit more about the title side. And of course, that's where the legal paperwork comes in to
Right.
protect everyone. When your buyers, let's say, are doing maybe a shorter 3-year term or something, and they go to a closing, they actually exchange the keys and sign the papers. It's
Right.
a real transaction, it's not
Sure.
just a handshake. Do they go to a second closing? Like, let's say, you have someone who is able to get a traditional loan in 3 years and refinance out of that deal. What happens at that point? Is there a secondary closing, and how does that loop get closed?
So, as a buyer, if they are able to get financing within this amount of period, they do have the option to do that as well. So yes, there would be a second closing where everything is done. The sale gets recorded with the St. Tammany Clerk of Courts, or wherever your district is, and then all that closing takes place with a title company, of course, and the title is transferred to that buyer.
That's great. So it's kind of a two-part closing, if you
Sure.
will.
Yes.
Okay, well, that's really insightful. And it's great to know that you are working with people and doing this successfully every month, especially with the way interest rates have been. This has been a good option for you
It
with your
is.
clients. And we really appreciate you coming on the podcast today and
Sure.
giving us your insight from the brokerage side of how this really can be a win-win for buyers and sellers in
Right.
real estate transactions.
Yeah, I'm really hoping that people are a little more flexible now, whether you're a seller or a real estate agent. So talk about it more, have more conversations with your sellers as an alternative option, especially if you have some of those properties that have been sitting out there for a while. That seller might have no idea that this is an option for them. But don't be afraid to talk about it, and also educate your buyers that we could present a different kind of offer for this market.
That's wonderful. Thank you so much, Gabby.
Thank you for having me.
Being with us today. We really appreciate it. And hopefully our audience continues to stay tuned as we interview pros like yourself throughout the podcast series.
All right. Thank you for having me.
Thank you.
Thank you for joining us on The Closing Table, where we make real estate work. Stay tuned for future podcasts where we discuss real challenges and solutions across the industry.